And joining us for the Sunday market update today, the 4th of August 2024, is our price action expert, Mr. Jeff Pine. Over to you, Jeff.
Righty ho, everyone, and thank you for joining us for this Sunday market update. Apologies for the late start. Sometimes these issues just pop up when you least expect it, but here we are, live and true. Glad you could join us, and I hope you're going to get something out of the next 30 minutes or so. Good afternoon to you, Seng Win. It's lovely to have you here. Righto, what I'm going to go through, as I normally do when I do Sunday market update, is my weekly watch list, really, and how I arrive at that point, what I'm looking for in the markets for the upcoming 5 trading days. It may not be an example of being able to trade immediately tomorrow morning. In fact, I very rarely do that, but with any luck at all, we might find a setup that will allow us to do that, gaps notwithstanding. Okay, so I start with looking at things I call game changers. Now, a game changer is a thing that is otherwise known as a key reversal bar. And I'm looking for those on the weekly chart, funnily enough, given that we are at the beginning of the week. They are, for those of you who are not aware what a key reversal bar is, it is a bar, candle, call it what you want. It's easier to say bar than candle because it's one syllable, not two. And that's why I say bar, but excuse me for those of you who deal exclusively with candles. It's actually a candle or bar, in this case, whose high is higher than the previous week. Not the high, not the previous high, but the previous week. So its high here is higher than the high of last week. The next criteria that I use is that it has to close, that's last week's candle, has to close on or near its low. Most important, those 2 points. So that's how you recognize the bar or the candle. Its high is higher than the previous week, and it closes on or near its low. In the case of going in the opposite direction, you've got a candle whose low is lower than the previous week and closes on or near its high. You can see from this example that it often delivers something that's quite nice, aka a winning trade. We will analyze these candles or bars to see if they're actually got a high probability of producing a winning trade or position. So this week, those candles include the first one I'm looking at, which is Aussie versus the Kiwi. Now, I'll give you a few more criteria that I use. The next criteria that I use is that candle or bar, the direction in which that's pointing, has to agree with the major momentum or trend. There may be a difference there in the momentum or the trend, but generally that will be the same thing. It really is a matter of, does this candle and the direction it's pointing agree with the major or the big boss, as I call it? And the only way I can tell what the big boss is to go out to the extreme. And that, of course, is the monthly chart. Now, the monthly chart on Aussie versus the Kiwi, not irregularly, if I can put it that way, and certainly no surprise, because this is a ranging pair. They are both commodity-driven currencies, and they tend to ebb and flow with the price of commodities, or indeed whether the market is in a mood for risk, or has an appetite for risk, or has absolutely no appetite for risk. So in this case, the appetite for risk in the market I'm depicting, or I'm seeing or witnessing, is very, very poor. I don't think there is a great appetite for risk, and we're seeing that in the risk-off currencies, namely the Swissy and the yen in particular, because of the Bank of Japan's attitude of late, which has completely flipped from where it has been for the past 2 years. So the big boss here, in my opinion, is actually to the downside. And the reason I say that is, if you look at this high and you were to draw a trend line through here, we would still be underneath that. I can do that if you wish, but I'm sure you would all agree that that is the case. So price is still underneath that. In fact, last month's price or last month's candle has given us a clear rejection of that level. So I agree with the directional bias here. I think short is definitely the way I would like to trade Aussie versus the Kiwi at the moment. And of course, the Aussie under extreme pressure. There's a couple of things that are going to prevent me from doing that in the first instance. And I said from the outset, sometimes I've got in fact, there's three things stopping me from doing that. Sometimes I've got a clear candle that I can actually trade on a Monday morning. This would be one of them if it were not for three problems. Number one is the size of the candle versus the potential reward till you get to a support level, that being the monthly pivot. The second is, well, that's two at the end of the day. And the third is that we've got an Aussie interest rate announcement, not tomorrow, but on Tuesday. Now, if we consider that, and yes, I'm a technical trader, but I can't avoid, I wish I could, avoid fundamental announcements or data releases. And of course, that will be the case with the Aussie on Tuesday. Now, before, and I try to mix in a little bit of analysis there on a fundamental basis, and I was dead set keen before last week's CPI figures on the Australian year on year and month on month, sorry, not month on month, quarter on quarter CPI figures, that if they were actually even level or maybe even greater than expected, I would have anticipated that the RBA would have backed up its threat, if you like. If you've got a mortgage, it's a threat, that they were going to raise interest rates. Now, I think that is completely off the table now because the CPI figures year on year, actually year on year, I think was down and quarter on quarter was level. So I think that interest rate rise is now off the table. That's going to make the Aussie, which is already under extreme pressure, I think less favourable than I would like it to be, certainly, given that I'm travelling in the next couple of weeks. So, yes, I agree with the direction, but I can't possibly think about an entry here for those reasons. What I can do is accept that this is a directional bias that I'm going to carry through the week unless the RBA did in fact raise interest rates, which is almost impossible, not going to happen. Stranger things have happened. So what I'll be looking for is carry the direction bias through, allow this maybe to hit a support level. There is one through here and the monthly pivot, pull back and give me a lower high, maybe giving me a right shoulder. Then I can look to trade it, maybe on a daily chart, maybe on a 4-hourly chart. Now, that's going to be the theme that I carry through on the Aussie pairs, no matter what they are, throughout the week. But this Aussie Kiwi is suggesting that we are sellers of the Aussie versus the Kiwi. Now, I won't go through that entire analysis on Euro versus the CAD, but what I will say is that this is also a clear breakout of a key level, that key level being around about 1.5050. And you can see how strong that breakout was. It was also a game changer bar or key reversal bar, as I've described to you. And the directional bias here, we simply go to the monthly chart. Monthly chart's telling us that we're at a resistance level that has now been broken. Where is the actual direction of this market? I'll probably just have to get rid of that and go a little bit wider to answer that question. And I've got to say, we're in the middle of nowhere. You can draw a resistance trend line that we haven't quite reached. You can draw, well, I've already got one here. I actually can't see the bottom of that, but let's swing it around like so. And let's anticipate that it's there underneath my control box. And we've got a trend line that looks something like that. my gut feeling is we'll hit this trend line and bounce off it, but we're not there yet. And of course, we're on a monthly chart. So you drill that down to the weekly, and you've created your own resistance level with that trend line. And now you're thinking, okay, I can buy this, but here's my first problem. I've got a resistance level dead ahead. That's one of the problems that you've got with EUROCAD. The second problem is you've had absolutely no pullback at all. So you've had 1, 2, 3, 4, 5, 6 weeks in a row where this is just on fire. Answer, same again. I just want to pull back, maybe to retest that breakout level. Then I can trade it long up to here, maybe with a decent risk to reward, maybe on the daily chart, maybe not. We shall see how that all pans out. So let's go back to the list. So I've eliminated 2 that I'm not prepared to trade until I've got a pullback at least. Euro versus the dollar is next. Now, euro versus the dollar on the weekly chart is suggesting that we are buyers, and a lot of that is the result of bad news out of the US, in particular, the non-farm payroll stats that came out on Friday, which were poor in terms of jobs created, poor in terms of wages up or down, they were down, and poor in terms of the unemployment rate. So the dollar, which was already under pressure, is now really out of favor, and you would anticipate that the direction right on euro dollar long here is probably on the money. The big picture, or the big boss as I call it, is probably disagreeing with that. We've had a little bit of a rally off the bottom. We've found a resistance level here, but ultimately the trend momentum the momentum is mixed, but the trend is certainly still down. So I'd find it very, very difficult to buy euro dollar on that basis, certainly on a weekly chart. Small time frames wouldn't have a problem, but untested monthly pivot below, we're at a bit of a horizontal resistance. I don't think it's the worst, frankly. I really don't. But do I really want to trade long at that level? Maybe I do. And if I do, I'm trading straight into resistance. But I think if I got my stop loss in a reasonable place, maybe underneath the monthly pivot, or maybe underneath this swing, if you want to be super conservative, underneath this one, but you would then anticipate that would break that horizontal level. Otherwise, the reward to risk is no good. I'm not discounting that. And if in the morning we don't have a big gap in the market, I will probably do the former, and that is put an entry here, risking trading through that high and putting my stop loss underneath this first swing here. Let's move on to pound versus the CAD. Way too high for me to anticipate an entry here. If you look at the bigger picture on the big boss, you can see a strong horizontal level here. I would need to see that broken and retested before I actually traded that. Directional bias, pound versus the CAD. Pound's a little bit on the sniff side. Not too sure it's going to rally, but the CAD's certainly in trouble as well. And if oil continues to drop, you'll probably see that the Canadian dollar will continue its downfall as well. Pound versus the Kiwi, weekly chart suggesting that we are sellers for the first time in the last 6 or 7 weeks. Now, my credo is not to sell a 1-bar reversal unless I've got something to back that up. The something to back that up is probably this horizontal level here. I don't think this is completely overcooked, although if you look at last month's bar, this was really, really keen to take out that level, but it failed. And since then, we've seen on the weekly chart that reversal bar. I don't believe I can agree with just entering on that premise. The market now looks to be in a strong bullish momentum, and I agree with that. But the resistance level would stop me from trading it long, that's for sure. Trade it short, I would need to see a lower high. So continuing that theme that I said before, I want to see a pullback before I can trade it. Kiwi versus the CAD, I was actually dead set keen to see this break this level last week, and it simply did not. It bounced off that trade line, or trend line, if you like, with gusto. If I look at the big picture here, same applies. You know, I can see that we're trying to get long here. I can see that and that resistance level is a little bit out. I'd have to say it's probably in that vicinity. There's a bit of a cloud of a price here, off which we have now rejected. I can't see this being a buying opportunity for me, frankly. So I'll continue my bearish outlook and dismiss this because I just don't like the situation that it's sitting in. It's not agreeing with the big picture, is where I'm going with that. The final one on the game changer bars is Kiwi versus the dollar, and pretty much the same applies here. The big picture, or the monthly chart here, is undeniably still downward, and it's very, very tough to think we're going to break out of here immediately and just go long. We have got a double bottom here that's suggesting that will be the case. We've since had a higher high, higher low, lower high, higher low. This is all over the place, and I can't pick a directional bias on the intermediate term, but on the bigger term, I'm seeing selling only as the way I want to go. In fact, I'm going to deal with this a little bit later and show you how I'm actually biased short on this one. So they're the game changer bars that I'll look at. The next phase I go through when I'm looking for directional bias on the week is probably to go back and have a look at last week's numbers, which I've done, and I won't bore you with those. But the main takeaway out of last week that is that the dollar for probably, I suppose, a new, if you like, a new bias, I'll put it that way, in my book, is now fairly bearish. I can't see, however, with the market being risk off, that the dollar is going to tumble out of the sky, because in general terms or in historical terms, you'll see a stronger dollar when the market has gone risk off, and I believe the market is risk off. So I'm kind of not real sure on where I want to be with the dollar, and I would probably tend to steer away from trading against the dollar at this point for that reason. But then I have a look and say, well, what's coming up? We know the Aussie cash rates on Tuesday. We've spoken about that. We've got employment data coming out from New Zealand that will affect the Aussie Kiwi. That's 2 days running. Then we've got more Kiwi and Aussie news, unemployment claims. I don't think that really does too much. But at the end of the week, we've got the unemployment rate coming out on the Canadian dollar. So Comdols, the commodity currencies, all three of them, Aussie, Kiwi and CAD, will be affected by this week's numbers. Aussie will also be affected by this one. And so the Kiwi will be to a lesser degree with the Chinese CPI figures coming out as well. So those three will be definitely things that I'll be considering as to be cautious with, not necessarily not trade, but be cautious with. Then I go to this one, which is the currency indices, or indexes rather. And here you'll see a clear depiction of what I was talking about with the US dollar. And that is that the US dollar is under extreme pressure. We noticed last week that we'd had a break of this support trend line, and we'd come off this resistance trend line underneath this horizontal level, and was really looking for a retest of that trend line. We only got a retest of the horizontal level before it disappeared. Of course, news had a lot to do with that. Where do I see that going from here? Well, very, very strong candle. It is a game changer bar, if you like. And ultimately, I think, as I said last week, I see this down here. How that gets there, of course, is anybody's guess. Does it go straight there? Does it pull back? Does it give us a trend? Good question, but bearish is the only place I can be at the dollar at the moment. The Australian dollar, look, it's similar, but it's not the same, in my humble opinion. And the reason I say that is because it's had a very, very strong rejection of this just below 62.5 level it is. And we've had a strong push to the upside until we hit this resistance trend line. We pushed through that though, and the tail of the tape here for me is every time they push the Aussie down, it responds. You can see it here, you can see it here, you can see it here, 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 here. This time is, and there's a famous saying in trading, this time it's different. Well, it does look to be different, I've got to say, and the Aussie looks to be under extreme pressure at the moment. What I would anticipate, however, is some kind of pullback either to this trend line or this trend line. And I've also got in the back of my head that this box range here has not yet completed to the upside. That would mean potentially that in my brain, we may yet see this turn into a low and the Aussie have another push. I don't see anything fundamentally that agrees with that, frankly, but the chart is the chart. And the one thing I would be anticipating is a pullback on the Aussie. Did come off its low at these rejection points, but it's anything but strong. And I would hesitate to say that I'm bullish, the Aussie, that's for sure. Canadian dollar, we've been watching this again for some time and anticipating that this was a low that would lead to, pardon me, the top of this range here. Hasn't happened. And now we find ourselves broken below the bottom of that range and looking very, very weak. Again, the commodity currency suffering, and in a risk-off market, that will continue to be the case. Oil probably is the only thing that can save this at the moment. And if oil were to rally, and I'm making no comment on that, don't know too much about oil fundamentally, that would be probably something to save the Canadian dollar, but it does look to be in dreadful strife, so I'd have to be bearish. Pound looks to have now retested this level, and on last week's evidence, I can't give you a bias because it's pretty much a doji bar. It's a spinning top, but it looks very doji bar to me. So I don't know if it's going to bounce off here or if it's going to have another crack at going below here. Neutral, 100% neutral if that's a thing. The Swissy, we anticipated that once we came back inside this rising channel, that the Swissy would have a positive outlook. That has certainly been the case last week as the market did go risk off, and the Swissy, the yen in particular, rallied substantially. However, we are at a fairly recently strong horizontal level. We're at the middle of this channel, and I do expect that this might have a little bit of a pause here. I don't think it will reverse, so perhaps buy the dips on the Swissy pairs, be 100% behind that. So bullish the Swissy, but maybe just a little bit of a retracement before you go mad. The Kiwi, look, this is a classic situation where we've broken support and then rebounded back and retested support. Not only support of the trade line here, trend line for those of you who don't know what trade line is, and it's really similar. And exactly the same here where we've had a false break. It's been a long time since we came back here and broke it again, but this area here is extremely important to the Kiwi. And in my mind, unless the market were to go risk on, and I don't see that happening anytime soon, then I'm a seller here of the Kiwi, but only underneath this bar. I would like to see some price action on a smaller time frame on the Kiwi pairs that give me an opportunity to trade into that level as well. But I'm bearish the Kiwi. The yen, well, the story of the yen, I don't need to tell you, has been one of absolute dismal failure for the last goodness knows how long, 2 years, it seems like forever. Now it's fighting back, and it would appear that the momentum of this is undeniably bullish at the moment. Is it due a pullback? Maybe yes, but ultimately, I think the yen continues to strengthen in this risk-off market, as well as the attitude of the BOJ. And finally, the euro. Euro's at resistance. Great bar last week, good buying bar. We're now seeing a higher high and a higher low, perhaps, on the euro. I've probably got to give it a chance to break through this this trend line. So I won't say I'm bullish, but I'm cautiously a little bit hawkish, if I can put it that way, on the euro. So what's that all mean? Well, let's bring it back to the charts. And I've now got a bias long the pound, long the yen, long the Swissy, and I'm a little bit ambivalent. Everything else, maybe the euro, a little bit stronger, but I've got bearish attitude on the dollar, bearish attitude on the Aussie, and a bearish attitude on the CAD. So I go back to my pairs and say, well, how is that going to pan out? And have I got an opportunity here? So Aussie Swissy, too far gone, but a pullback, as I said earlier, buy the dips on the yen. Well, this is sell the rallies pretty much on Aussie versus the Swissy. Exactly the same applies on Aussie versus the yen. To actually jump in here now if you're not already in, and if you are, fantastic, hang on for dear life, because I think you've got still plenty of pips to gain on this pair. Pullback required, and no way I could trade that at this level. I'd have to see a pullback on Aussie versus the yen. The same is going to apply on every single pair that I've just mentioned. The two yen Swissy versus the Aussie versus the CAD and versus the dollar are all going to be exactly the same. So whilst I'm fully on board now yen strength, I would need to see a decent pullback. Let's use dollar yen as an example. I'd be looking at that level minimum before I could trade this short. And if it did get to there, then most definitely I'll be looking for setups, no question. So there's no need to go any further with those. That is the attitude that I'm taking into this week. I've got strong yen, strong Swissy, but can't sell them at this, or sell anything against them at this point. But pullbacks, most definitely I'll be looking for. As far as the next level that I go to, and I won't keep you much longer, but the most important thing to me, now that I can't find a clear entry or refuse to take them at this point, is go and have a look at things I call market structures. Now, every trader's got a different method of measuring market structure or depicting market structure. Here's my method, and I'll just very, very quickly go through this. Euro versus the Kiwi is at an extreme high. That's the weekly chart I'm looking at. And if I go back in time, you can see that this level here has been honoured, or near this level has been honoured on multiple occasions. So I can't trade through that with any confidence. So Euro Kiwi becomes under my notice, not as a buy, but as a bounce off the top. We've already seen that attempted and failed, but a lower high in here. This is the weekly chart. I wouldn't be looking for it on the weekly. I'd be looking for it on the daily, or I'd be looking for it on a 4-hour chart. We've already got a pullback of sorts on the daily. On the 4-hour, that's going to look even better. That beautiful retracement here. And look at how the pivots are working here. It's bounced off the monthly, bounced off the daily. Oh, sorry, that is the daily, and is now at the weekly. I think this is an excellent place to look for a setup short on Euro versus the Kiwi. Now, that does not agree with my analysis from the indexes. That said, it doesn't really have to. All I need to see is that structure, and the market structure is telling me that I'm at a strong resistance level on Euro versus the Kiwi, and a lower high in here on either the daily or the 4-hour chart does get me short. Aussie versus the Swiss I mentioned, and I don't want to suggest to you that I'm a buyer here. I'm not. The difference with this one is it has broken that level, that horizontal level, and the monthly chart's not going to be of any help to buyers here either, because the next one's down here somewhere. So this is a classic breakout. Whether it's sustainable or not will be told to me by what happens in the next few days or so. And that will be either a retest of this level, a re-break of this level, so back above it. And either one of those is useful to me. I just need to understand what's going on at the time. So a clear close on this level here or a rejection of that level here would get me bearish. So I'd like to find a sell up here. But if price got back above it and then were to retest it, then I'd be going in the opposite direction. Not sure what causes that from a fundamental point of view, but this is now of interest to me because it has broken that structure. CAD versus the yen is in my watch list as well, and the weekly chart will show you why. It has now filled, all but filled, that downward spiral off this incredible inverted, if you like, bullish triangle. So not far to go here. I would love to see that hit that level before I got interested in it. If we get a pullback beforehand, then I think it's eminently tradable down to that level. But in the meantime, if it goes there first, I'll be looking for a bounce on CAD versus the yen. So this is my version of trading market structures, not as a scalper, but as somebody who's looking for candles to tell me what's going to happen next. And it's either a break or it's a bounce, one or the other on this one. And I'll wait for the candles to tell me that. This one is Swishy versus the yen, and also at a rejection of horizontal level here. I'll just put that in for you as well. Interesting point. And I'm looking for either a higher low here, or I'm looking for a break of this level. So either one gets me interested. Daily chart, 4-hour chart, happy days. That's what I'll be looking for. 2 to go. Euro Aussie is another. And it is also at a resistance level through here. It can go higher, no question. And look at the strength in the momentum. I can't, completely undeniable. But there may well be on a shorter time frame an opportunity to trade this as a retracement, if not a reversal, back down to here. So that's where I'll be looking. And again, it'll tell me it'll either go through it and keep going, go through it and retest it, in which case I'll be able to trade the retest long, or it'll come back underneath it, in which case I'll be able to trade short. It's just a matter of waiting for those setups to occur. And finally, actually not finally, there are a couple more to go. So I hope I'm giving you some idea of what I'm looking for here. This is Euro versus the CAD, also a clear break. And for that reason, I'll be paying attention. Are we headed to this trend line, in which case I'd like to see a pullback on a small time frame, trade it to there, get some money in the bank, or if we come back underneath here, a lower high gets me short. So I'm not committed to a direction. I need to see what the candles tell me and how they actually play out. Euro versus the pound. Euro versus the pound on the weekly chart is again different kind of structure. This one, there is a support level running through here, which I'll point out to you, and it's been support through here. It's been a little bit of resistance, certainly resistance here. So it's a key level, and that level has now been broken. A few weeks back, we saw this gap, which of course ultimately closed and then drove the market straight back down. Then another gap here. Now it's broken through all of that level. So I'm a bull, Euro versus the pound, and I would like to get into this. So a little bit of a pullback. Buy the dips, I believe, on Euro versus the pound is the way to go this week. Like that strong bar, like the fact that it's broken back above that horizontal level. A pullback here, buy the dips, I think is really cool. Hi, Jeff. I have a long time pending order triggered for sell pound versus dollar at 128 over the weekend. Looks like I should get out of it, you think? Hi, Anne. Thanks for the question. Let me have a look at that in 2 ticks. I'll just do one more. Kiwi versus the CAD. Oh, we've already spoken about that. Dollar versus the CAD. Dollar versus the CAD is, as I said to you from the outset, something that I don't really want to get involved with, the dollar pairs. But this is clear to me that we are certainly in a sell zone. Look how strong this level is. Resistance, resistance, resistance. Failed resistance, so I didn't quite make it there, but it's made it there now. This is an area to pay attention. on dollar versus the CAD. Not predicting a direction right now, but I would anticipate that we're going to see this down here at some stage. How that gets there? Well, probably either a false break of this horizontal level or a lower high in here on the smaller time frames. Pound versus the dollar for Anne, and then I'll let you guys go. Pound versus the dollar. Okay, let me get rid of all this noise. Actually, I've got a pound dollar chart here somewhere, or I should have. There we are. It's just a bigger mess. What are these blue lines? Oh, it's the pivot. Okay. Let me get rid of that. Go to the weekly. And yeah, interesting. This one has, is that a genuine trend line? Yes, it is. Has hit this trend line, which is a monthly trend line. So primary trend is short, been rejected by that attempt to break it at a reasonable level, I would say. So it's pretty strong there, pretty strong. And the next sort of seems to be trapped in here, in between these two trend lines. That's a monthly chart I'm looking at though. So there's still plenty of room. Looks to be trending on this particular end of the chart, but I also see that's not just a trend. To my eyes, it's also a channel. And that channel coincides with the top of that trend line, which coincides with that horizontal level. So I've got a bearish outlook on this. 128, you say, and let me have a look at 128. 128 is right about there. Okay, so you're very close to entry. I'm bearish. There's no doubt about that. I'm bearish, pound versus the dollar. The dollar news has made a difference here, however, without question. And that rejection bar of the monthly pivot, I'm sure you'll notice, you will know, is very, very strong. However, that's not this month's monthly pivot. Can't be. I don't know where this month's monthly pivot is. There it is. Okay, so there's a big difference. We've broken that. Not that that's the case, because the monthly pivot actually went up to price. But we've already rejected the monthly pivot of sorts. And I hate to be anybody to burst your bubble here, or take away your confidence. I'm still bearish. I'm absolutely bearish, pound versus the dollar, on this chart evidence. What I am cautious of, however, is that news event from Friday, which of course you can see right there in that chart. The daily chart, the daily candle is going to tell you that, but it did come off its high. I think this is tricky. What I would recommend, if you are uncomfortable in that position, is to close it. Absolutely, if you're uncomfortable. If you're not uncomfortable, and would be more comfortable with, it depends a lot on where your stop loss is as well. If your stop loss is above all this noise and above that trend line, above here, above this swing, or even above here, then I'd be okay with that. If your stop loss is here, I'd be worried. I'd be concerned. So maybe a reassessment on that basis. But from a chart point of view, I'm still bearish this pair. Maybe what you could do, 129.14. Yeah, I think that's dangerous. That's right here, right? 129.14. Yeah, I think that's dangerous. I think we could probably have another test of this trend line, if not that high, before it does go short, if it goes short. But I'd be concerned with that. I would, absolutely. But if you're thinking about hanging on, what you could do is reduce your risk down to nothing, if you like. You have room to widen your stop loss. If you do that, cancel your trade first, because if you widen your stop loss without cancelling the order, what you're going to do is you're going to add to your risk dramatically. So just bear that in mind. If you think you're moving your stop loss, reset the trade. If you are at least, if you're uncomfortable at all, as I say, get out, cancel the order. But if you're comfortable with moving your stop loss to one of those two places, cancel your order first, because your risk will be way too high by doing that. Right, guys, in summary, do I have anything to trade right now? And my answer is no, not really. But I've got a whole bunch of ideas based on those biases that I've given you. And I think probably if there's a super favorite, no, I'm not even going to nominate that. I think there's too many of them. And I think they're all a similar vein. And follow the Swissy, follow the yen. I think they're fine. But don't have too much trouble with those. In my world, I want retracements on those pairs. The dollar, a little bit tricky. And I'm going to leave you with that, guys. And I hope I haven't confused you more than needs be. It's a tough one, because the chart's telling me one thing and the news is telling me another, and that's always a bit of a conundrum. Right, guys, thank you for your company. Sorry we're a bit late starting, and we look very much forward to your attendance next week when you'll have another trader on Sunday Market Update. Have a wonderful week ahead. Stay safe. Bye-bye for now.